Hello, friends. You are watching the series Politics and Economics, where we highlight the most significant global political events and their impact on the economy. Today, we have a special episode in which we will analyze how international sanctions against Russia are affecting the oil market and what consequences this may have for the global and local economy. Why is this important? Because oil is not just fuel, it is the foundation of the global economy. Changes in oil prices influence the cost of goods, services, and even the daily lives of each of us. Now, let's dive into the details. On November 16th, the G7 countries reaffirmed their commitment to tightening sanctions against Russia. Key measures include enforcing the price cap on Russian oil and imposing sanctions on those who violate these restrictions. These measures are already impacting the global market. For instance, on November 25th, the price of January Brent crude futures dropped by 43 cents to $74 per barrel compared to the previous day. Even minor changes can have significant consequences. For example, European countries are already preparing for a possible increase in energy prices during the winter. How will this affect businesses and consumers? For Russia, the consequences of these sanctions are becoming increasingly evident. Oil exports remain the main source of income, but the G7's restrictions are creating serious obstacles. Major buyers of Russian oil, such as China and India, are indeed increasing their purchases. For instance, in October alone, exports to India reached record levels. However, these countries pay significantly less for oil than Europe, which reduces Russia's revenue. According to estimates, losses from oil exports could amount to up to 30% of revenues. This is a serious challenge for the Russian budget, which is already facing a deficit. Additional spending on domestic programs and geopolitical conflicts is worsening the situation. At the same time, sanctions are affecting the entire global market. Europe continues to grapple with the effects of the energy crisis. High oil and gas prices are driving inflation, increasing transportation costs for goods. This creates a chain reaction. Businesses raise prices, leading to higher costs for consumers. Developing countries are also suffering. For example, Africa and Southeast Asia are facing rising fuel import costs, which are severely impacting local economies. In some countries, the cost of energy resources has increased by 20% over the past year, making them unaffordable for much of the population. What happens next? If Russian oil exports continue to decline, prices could reach $100 per barrel. Some analysts believe that increased oil production in the US and Saudi Arabia could stabilize the market, but this will take time. What do you think? Can new sanctions change the current situation? What consequences could this have for the global economy? Share your thoughts in the comments. Subscribe to our channel to stay updated on the most important events and analytical reviews. Thank you for watching, and see you in the next episode.